All right, thanks everyone for joining. Today we are doing a deep dive into the current market that we're experiencing across Ontario. I know there's a lot of questions, a lot of uncertainty, but we're going to break down some of the opportunity that lies in a market like this.
No, and I think today's a really exciting topic. There's obviously, globally, there's a lot of things that are happening, which in turn has created a lot of opportunity within our marketplace. And for us as realtors, yes, a lot of the messages, across the board or maybe on your Instagram feed, depending on who it is you're following, is markets down, markets down. Um, but to be quite honest, there's a lot, from our standpoint to get excited about. And what we're going to do today is just break that down and show you guys kind of like turning the screen around. You'll see what things look like from our side and where that opportunity may be. So I think the silver lining here is you guys, there's a lot of good buys. You're not going to buy something and turn around and sell it in 6 months or a year, and it's going to be a grand slam home run. But, real estate should always be looked through in a long term lens. We had a run for a while where, yeah, you could make some good money really quickly, but that's obviously not going to be the norm. And we're going to unpack as to where we are today.
Yeah, so today we're going to talk about kind of three main buckets here. So first time home buyers and where the opportunity is for them right now. Second is for those who maybe you've been in your home for 5, 10, 15, 20 years and you have a bunch of equity in terms of what you purchased the house for versus what it's worth now, how you can use that equity to buy a second property, maybe a cottage or a vacation property in the type of market that we're in right now. And then third, for those who bought during the peak, so during the pandemic times, maybe you bought at a high price and your house is likely not worth what you paid for, unfortunately. But maybe your situation has changed. Maybe you have to go back to work. Maybe you have a lifestyle or family change that you need to move, and how we can change the mindset there from, oh no, I'm losing money to what's the opportunity in the long run. So
Let's
let's
get into
talk
it.
about first time home buyers first. So Jesse, I'll kind of let you take it away. I'm going to share my screen here because I think you want to talk about kind of specific pockets here, just to make a real life example.
Yeah, and I'm going to preface this where this is not going to be some PowerPoint presentation. Like we're going to have a conversation here. But what we do want to show you guys as far as where the opportunity is as of right now, what Michelle has on the screen as of right now, this is going to be a list of the active townhouses, right, Michelle?
Yes.
Active townhouses that are currently for sale in Orangeville. Now, again, hey, we're licensed to sell in Ontario. If there's a specific market that you have some interest in, feel free, shoot us a text, a DM. We'd be happy to do this for a market that you're interested in as well. Obviously, for us, our office is in Orangeville, and this is where there's some good opportunities. So what we're looking at right now, I don't have my glass on, so Michelle, you're gonna have to kind of guide me through this, but we've got, it looks like, what is it?
There's
26.
27 townhomes for sale in Orangeville right now, that range from 669,000 all the way up to 850,000.
Okay. So just quickly off the hop here, hey, dare to dream. I appreciate everybody trying to shoot their shot, but when we're looking at the listings here that are active, 850,000, to be honest, don't know whose listing that is. It's probably a bigger home. At least I hope it's big in square footage, but odds are they're probably not getting a whole heck of a lot of activity. Okay, there's 27 actives for sale. Now, what I do know is we're doing this webinar on June 2nd. Happy Canada Day, happy 4th of July for our
July
American
2nd.
friends.
July 2nd.
July, correction. Thank you for that. So happy Canada Day yesterday for Canadians. Happy July 4th for American friends. But 27 active, and then we had last month in the month of June, correct?
In the month of June, there was 3 townhouse sales in Orangeville.
Correct. So what that means, quick math, 27 active divided by the number of sales last month, which is 3. That's going to be, calculator,
Nine,
9.
nine.
9 months of supply. Okay, so for you guys that are looking to transact, or for those that are looking to sell, this is going to be the biggest number for you in terms of to determine where the market's at. 9 months of supply is a buyer's market. What that means is one in every 9 homes on this particular list of 27 is going to move. Okay, so if Michelle was to go in buckets, okay, what do we got? 1 to 9.
So one house is going to sell from this bucket, for instance.
Yep.
One house is going to sell for this bucket. And then one house is going to sell from this bucket. Now, it might not be each of those buckets, but that's just to kind of visually make people understand.
Exactly, right? So if you're someone who's, let's say, on the selling side, it's a different conversation. We're going to say, hey, 1 out of 9 homes are going to sell here. Which bucket do we want to be in? Now, what this means for you guys as buyers, okay? If let's look at, for example, my eyes aren't good, like I said, but Sea Line, this is a nice area in Orangeville, relatively new as well. Let's just have a quick look at this one here. So 690,000 days on market. Michelle, can you put the cursor just over days on market? Okay, there's 10. Okay, 3 bedroom, 3 bath. Just click through the photos. Let's go through this here. Okay, it's going to be, hey, listen, it's white, it's bright.
Yeah, it's a nice property.
This is going to show well. Again, keep in mind, is probably going to be very, very builder grade as far as finishes. Obviously, it's going to be an unfinished basement, but where this property is located, you're in a great spot in town. Okay, so if it's going to be off of Sea Line, that's going to be over in that's going to be west side, right, Michelle?
Yeah.
Okay, so west side, so you're gonna have no frills. That's gonna be within walking distance. Alder Arena is gonna be there. Sobeys, for those that like Firehouse subs, that's nice and close. Chuck's Roadhouse, and go on and on. But like this to me here for 690,000, this is going to be a slam dunk of a buy. Now this price is going to be negotiable, guys, because hey, 10 days on market. They've also had a history of being on the market for a while, trying some different prices, right, Michelle?
Yes.
Okay, so sorry as I drink that. So this is a good opportunity. To me, this price is negotiable. So hey, where could you potentially land on this particular property? 690. They're going to maybe want to be 1 to 2% within there. So let's say anywhere between 7 to 14K is probably going to be where the seller's expectations are. Having said that, can you go 21, 25K under asking? You can always try. You want to go lower, great spot to start. But hey, just as a benchmark, 680, 675, to me, that's a slam dunk of a price. What are your thoughts, Michelle?
Yeah, and I think I'll switch this over here just to reference what these properties were going for at a time. There's a lot of speculation, like, is this the bottom of the market? No one knows. You cannot time the market, but we've certainly in price come down pretty significantly across Ontario, and I'll kind of show you in this pocket specifically. What it was during the peak. So these numbers here are from January to end of March of 2022. So Q1 of 2022, there was 20 townhouses that sold with the average sold price of $978,000. So that average now is $750,000. So that is over a $200,000 decrease in price from what we're considering the peak to now. That is significant. So if you're thinking and trying to crunch the numbers, when is it going to go lower? When's it going to go to the bottom? Well, we're pretty far down from where we were 3 years ago. So.
Well, let's go again. Let's look at the range here, and if you can put your cursor over there, just so that people can maybe see where my eyes are going here. But sold price. Here's your ranges at Q1 2022 at the peak, 731,000. on the low. Okay. High 1.251. I know exactly which house this was. This was a townhouse over in Parkinson, which, mind you, there's two for sale in Parkinson. I think right now, what, 700 and
Yeah, I don't know. Yeah.
okay. So here's the math, guys. When we break this down, average sold price is 950,000, with the median being 988. Okay, just for to keep it simple, let's go up to a million. Okay, 988. Let's round up to a million. The average sold price right now in Orangeville, 750,000. Okay, quick math. That's 25% decrease. Okay, let's put this into perspective. Michelle, you're my wife. What's coming up? What's coming up? What's something big that's going to get shoppers excited for?
Amazon Prime Day. Is that
Amazon Prime Day.
okay.
Amazon Prime Day. Okay, everyone gets so jacked up. Amazon Prime. Hey, savings on everything. Okay, Black Friday, Cyber Monday, discounts galore. Okay, get your Visa out, put that thing to work because you're saving money. You're still spending money, but you're saving. But not needed here nor there. Real estate right now, guys, it is on sale, and for the who knows for how long, we're down 25%. Okay, from the peak. If you're looking to transact for a townhome in Orangeville. Okay, the only guys that are going to be losing in real estate right now, and again, this is going to get a little bit pitchy, but any of these 20 purchasers that bought in this particular time period, if they were to sell, yes, they're going to lose. Okay, but what we can get into is we can get into the historical data in terms of the real estate market, and this is going to alleviate any concerns that you may have, because hey, yes, we can go down a little bit more in this market. We absolutely can. But let's go and show you a graph, okay, dating back to, what do we have here?
1975.
1975. Fast forward to today. Okay, so this is going to be 50 years of data. Okay, look at the real estate market. This is an appreciating asset class. Okay, yes, we went on a pretty significant bull run. If you go from 2015 to where we're at 2025, so a 10-year, there was a pretty good run. But if we were to go remove those years, real estate, what it is, okay, yes, you're a yo-yo up and down on an escalator. Okay, so as of right now, yes, we are coming down, but real estate is going to rebound, and it is going to continue to trend up. Okay, globally, like I mentioned earlier, we're in a really, really weird spot with everything that's kind of going on, and the real estate market is on pause. And what that's created is a lot of opportunity. So if we look at that townhouse on C line, we've broken down the numbers. Let's have a look at what this would cost if you were somebody looking to get into the marketplace, okay? In comparison to renting, okay?
Yeah.
In comparison to renting. Let's go through this.
Jesse. So just for reference, if we're looking at, say, C-line or very similar townhouse, your average rent is between 28 to 3,000. So in this scenario, we average that out. So we're basing this off of rent of 2,900 per month plus utilities.
So just walk us through, Michelle. So let's do the example of the one on the left here. 10% down. So 10% down. And this is assuming, guys, that you're getting this property for 690,000. So walk us through, Michelle, what's the cost?
Yeah, so at 690,000, if you're putting 10% down, that's $69,000 for a down payment. If you have an amortization period of 30 years and an interest rate of 4, which is more than doable right now, your monthly payment would be $3,361. So, which can be seen right here. So if we're comparing that to what you would be paying to rent the same property, you're paying $115 more per week versus renting. So yes, purchasing the property is still costing you more. However, if we want to try to break it down into like what you would be spending more per week, $115. So maybe you can find some ways to save on that extra $115. A lot of people use the Starbucks example. I'm sure you can spend quite a bit of money at Starbucks if you're going there every single day. So that's one way to kind of set aside this extra money that you would be paying. Now, if you're putting 20% down, if you have a little bit more savings or a lot more savings, your down payment there would be $138,000. Again, 30-year amortization at an interest rate of 4%. That's an extra $33 per week more to purchase the property versus what you'd be spending in average rent for the same property.
And guys, the big take home here is you are paying down your mortgage, okay? Not the landlords. You're not paying the mortgage for the asset that somebody else owns. You guys own this, okay? So you're again, you're paying down the debt, okay? Hopefully, fingers crossed, appreciation. These are things that you want to start to see, obviously, in your real estate investment.
Yeah, and I think like taking the leap from renting or maybe living at your parents into home ownership is a big one. And I think a lot of people just assume like I cannot afford what's on the market. But prices have come down. I think a lot of people maybe don't know what the actual average price of a certain property type is. So reach out to us. And depending on what area you're in, we can let you know what the average for a certain home that you're looking for is, whether you need 3 bedrooms or a finished basement, whatever. And you might be surprised on what you can get and for what price you can get it for in today's market. And then we can connect you with a mortgage broker and you can look at the numbers. Maybe you can afford more than you initially thought. Maybe you've been sitting on a lot of savings. There's no harm in exploring your options because, like we said, right now it's come down a lot. And interest rates potentially might come down even further. So these monthly numbers might come down slightly over the next couple of months as well, potentially.
Yeah, and I think we'll just kind of leave it on this note before we move on to our next section right now. But interest rates, they've come down. Okay, they may not show too much life in terms of coming down, but they're in a really good spot. Inventory is up. Okay, so like we just did in terms of our breakdown, 27 actives, 3 sold last month. Okay, competition down. You're not competing. You can go look at a property, you can take the evening, you can think about it, take a second walkthrough, a third walkthrough. Okay. You don't like the kitchen that's in there? We have a lot of tools where we could take a picture and we can then, hey, what do you like? Oh, I want it to be white and bright. We can send a rendering. It's not going to be just like that, but you can start to get ideas in terms of what it is that you want from your home once it's yours. So just some things to consider, because to be quite honest, as far as the opportunity that's out there right now, the first time home buyers, the market's ready for you guys. I can't stress that enough.
Yeah, and I know we've been talking a lot lately about first-time home buyers and all the opportunity that there is for them in today's market. But I think if you're currently a homeowner, you can also use the market that we're in right now as an opportunity. So if you purchased your home 10 years ago, 15 years ago, maybe you got a good price on it when you purchased, you probably have a lot of equity in your house. So equity, for instance, easy numbers, you bought your house for $500,000. It's now worth $1 million. You have 500,000 worth of equity in your house. So you can go to your bank and you can get a home equity line of credit and tap into some of that equity. Typically it's 80% of it, to then use that money and purchase your second property. Maybe you want a cottage, or maybe you want to buy something else. You can use all the money in your current house to finance or partially finance this second property.
Yeah, so just one of our guys just recently did this as well, where they purchased, again, had their house reappraised. Bank comes in, says, like Michelle just mentioned, we'll use her example, bought for 500. It's evaluated right now at $1 million. So a lot of people, there's this kind of misconception out there that in order for you to go buy a second property or a third property or a fourth property, that you need to have hard cash or that money needs to be liquid. Okay, so just like we did the first time home buyer example, those funds don't need to be in your bank account in order for you to transact and get another property. Michelle did a really good explanation. You can use your asset, your home, to finance, be the bank for your second purchase, your third purchase, your fourth purchase, because you're tapping into that equity and using that to buy another asset like a property. So
And a property doesn't need to just be, maybe you want land. Land is a very tricky thing to get financing for. Oftentimes you need alternative lending like vendor takebacks, but maybe you want to build your dream home one day and you're sitting on a lot of equity in your house. Maybe you want to take that out and purchase some land because then you don't need these alternative financing that have a higher percentage. So now you have acquired the land during a downturn market and then you want to build on it in 5, 10, 15 years, whatever. So there is opportunity. You don't just have to be a first time home buyer to get opportunity in this market.
okay, and just on that, because yeah, we deal with a lot of people where a dream of theirs is to build their own home, okay, where they want to go out and buy land. So let's just touch on that quickly. So from the bank's perspective, vacant land, there's no asset that's on that property for them to lend on. Okay, so what that means is, let's say a house, for example. Okay, hey, you can buy a real estate piece of property with a house on it. Let's say it's $1 million. Hey, the bank says if you can come up with 200K, we'll lend you the 800. So they have leverage because if you don't pay your mortgage, what happens is they take your house. Okay.
Mm-hmm.
Now with land, there is no dwelling that's on the property. So if you don't pay, yes, they're going to take the land back. But let's use even another example. You know, insurance. If the house catches on fire and it burns down to the ground, well, there's insurance. There's something to insure. Vacant land, there's nothing to insure. So this is where banks will not typically lend on vacant property. So for those of you that have equity in your home and you do have a dream to build your own property, this is a perfect example where you can do that. Land is also for sale as of right now. They're feeling the same things that we're feeling in terms of the pullback in the market. You can grab yourself a nice piece of property. And you also don't have to build right now. So you don't have to build your property, sell yours, pull the equity out, sit on the land. Now you wait 10, 15, 20 years. Now all of a sudden you want to build your dream home. The asset that you're in right now, your principal resident, your current address, 10 years, 15 years, 20 years from now, I can almost guarantee you it's going to be worth more than what it is today.
Mm-hmm.
So it's a great time for you to take advantage of land being down. Get your house reappraised, get yourself a line of credit, purchase the property, build the home when you're ready.
Mm-hmm. And now to kind of touch on the third category that we wanted to chat about is people who bought during the peak. So for people who bought when we showed that comparison of what the prices of townhouses were in 2022 in the first quarter, if you bought your townhouse for $950,000, but maybe you now can no longer work from home because your job has changed or their rules have changed. Maybe there's different family dynamics in your house that you need to change. And it's important to also note that your quality of life is also worth something as well. And I think this one is a big mindset shift. So if you're thinking, oh, I bought my place for $950 and now I'm selling it for $800 or $750. Yes, that feels like a really big loss. So I can totally understand that. But what you have to think as to what you're getting, you're also going to be purchasing at a discounted rate. And as long as your plan is a long-term plan to stay in the next place, you'll see that equity also rise in that next place. Because when the market goes back up, you'll see the returns there and they can be even greater than what you feel like you have lost. And in terms of if you're in a spot where you really don't like where you live, or it's really you're driving for 2 hours in your commute or something, yes, you may feel like you're losing money, but what are you gaining to have much better quality of life? Those things have to be taken into account as well. So I'll pull up that historical chart again, and just so you can chime in and say anything you kind of want to hear as well.
Yeah, I know. You hit a lot of good points there, Michelle. But I really think the big thing to kind of hit on here is its lifestyle, right? Like when the market was doing what it was doing and it was on steroids, and you couldn't overprice a property because something would sell, and now all of a sudden your list price makes sense because there's just no supply. The saying was you got to drive to your price point. Okay, it still applies today. Yes, if you want downtown Toronto, even though the market's down, maybe that's not feasible for you. But when the market was doing what it was doing, a lot of people had to make some concessions just to get themselves into that marketplace, right? So for them, like you mentioned, that 2 hour drive to work. Well, it's not just 2 hours because you're not going to take a private jet home, right? So it's 4 hours. You're driving there, and then you got to come back. Yes, you may not make money. You're probably going to lose money, just like what Michelle said. But what you're going to get is your time back, your time with your family. Okay. You're not sitting there just listening to podcasts and radio stations or the news. And the big thing here is that the area that you want to live in, they're feeling this as well. Okay. And if we do the math, let's just say quickly, hey, a $750,000 house, if it's down 10%, that's a loss of 75K, right? But let's do the math on 1.5. Let's double the value. So a 10% loss at 1.5 it's 150K, right?
Mhm.
So those homes, they're feeling it a lot more because, again, the adjustment has certainly hit their bottom line. And if, again, let's say hypothetically, you're still at the same workplace, you've seen an increase in your pay, you're financially responsible, you've got some savings. Now you can make that jump back further south in an area where you want, and your lifestyle is going to significantly change because you're not just putting kilometers on your car, burning gas. You can actually enjoy your life. And I think that sometimes what gets caught up in real estate is everyone's just like, I got to make money. I got to make money. You also have to live in your house, right? You
Mhm.
also have to wake up. You got to, do everything that you do and enjoy it. And if that component is daunting and it's really taxing on you, well, what a great time to make a change because you're going to go to an area that you like, and maybe you'll be there 10, 15, 20 years longer than, hey, that purchase that you're in right now where it's really just costing you money and time and energy.
Yeah, for sure. And I think you also touched on one thing that I wanted to expand on is the trade up market. So if you are currently in a townhouse, regardless of when you purchase, yes, you might not be selling for as much as you initially thought you were. But what you're purchasing is also come down. And typically the higher priced markets do take a bigger hit than the lower priced market. So yes, your price might have come down 10%, but so has theirs, and that is a bigger chunk. So it's a very good time to trade up. And kind of like what you said at the very beginning, is that you always have to have a long term game plan in mind when purchasing real estate. So as long as you do have that, a 5-10 year plan to kind of have that next property, then you will see returns on your investment.
Yeah, guys, I think from this standpoint, we can start to kind of wrap it up here. But there's again lots to be excited about. The beauty thing about residential real estate is an asset that you can get out there. You can walk through it. You can see it with your eyes. So from our standpoint, like if this is something that you guys are, the ideas there, reach out to us or anyone on our team. We'd be happy to grab a coffee or sit down with you, and even get out there and show you some property, show you what you can get in your particular price point. That act alone, going out there and seeing things and doing these exercises where it's like, okay, hey, you know what? That's actually within my price range and affordability. I think home ownership is certainly within arm's reach right now. And it's just a matter of kind of getting yourself off of your phone or your email and just getting out there and physically looking at things and finding out how attainable things really are in this particular marketplace.
Yeah, it's never too early to start the conversation as well. And you're not the only one experiencing, you're not the only one who's nervous from going from renting into buying your first house. You're not the first person who might be losing money on their current home because of a lifestyle change. You're not the first person to be trading up. We've dealt with all of these scenarios before. So reach out to us, have a conversation. We might be able to open up some opportunities for you, connect you with some people like some mortgage brokers. They're able to break down the numbers for you, and you might be surprised on what opportunity there is out there for your situation.
100%.
Yeah, so if you have any questions, like Jesse said, reach out to us. Anybody on the team, we're always willing and able to chat with you. And we hope you took some value from this today.
Thanks, guys.